welcome to the Market Alert for Thursday, the 26th of June 2019. So the main event, as far as Bitcoin is concerned, this dipped below 8K. This was obviously during Tuesday, early hours or late evening of Tuesday, and then yesterday markets found a bit of support. If we have a look at the daily chart, you'll see prices yesterday sitting on the 200 bar moving average. And if you stick around for the second part, where we look at the Dow and the other markets, you'll see how powerful the 200 bar moving average is when you start looking at daily charts. So yesterday prices finding support here. If we look at the 4 hour, you can see the support there as prices started to trade sideways. They also started to make lower highs apart from the quick run up we had here. So there's a bit of a triangular formation appearing in the charts there, so consolidating in an attempt no doubt to try and move back to the upside. And yesterday we got a bit of confirmation from this. First of all, we saw the market moving lower. Prices found support at the low of this test bar, and you can see this from the volume. Buying came into the market. And this is a crucial thing in this market because the volume is so obvious and you can see what's going on. It is always wise when you get something like this sort of a test bar to mark up so that you can see where prices are likely to find support. And you can see here that prices come down again. We had the first short, profitable trade. The market then closed back below the 20 bar moving average here, and then traded down and then found support as well. So you can see trading this signal here, given that the market's found support here, is going to cause a problem. I'm not saying that you can't trade it because we never know. Every single trade is unique and you have to trade what you see. But the key here is that if you're in a trade, then there's a good chance the market's going to find support where it found support before. And then as we come over to this side of the chart as well, late on in the session, the market's been narrow. We see yet again, but this time the market failing to close above the 50 bar and then moving lower and also finding support more or less at the 82.15. And then you can see why, because prices then move higher. That said, on the overnight market, just select this. You can see that prices have pulled back, and we can see that they've pulled back to the usual 76% retracement. I go from this low to this high, and you'll see prices sitting there now at this level. It's become a bit quiet given the huge shakeout of late Tuesday evening. So it's going to take a bit for prices to consolidate and then start to move again, which is why it's important to step back, have a look at the bigger pictures in all of these markets and see where prices are actually trading. Not too bad yesterday, but like I say, you've got to watch the support areas at the moment because given the big drop in the background, they're going to do whatever they can to try and bring the markets off the lows. Okay, so meanwhile in the stock market yesterday, we've got a surge in stocks. No surprise, they want the market on the highs. Apparently the transcript and all the rest of it to do with Ukraine and Biden. Again, another fake thing that the Democrats were trying to bring. But bonds higher and Bitcoin and bullion battered. Well, Bitcoin wasn't really battered that much, and gold and silver did pull back just a bit. So start off with the Dow, and we can see from the daily chart, as we talk about the 200 bar moving average and the power of it, you can see here when prices have actually traded below it, they've brought the market back. And if you only have to go across to the left and you'll see exactly the same thing. They will do anything to get the market back above this level or try and keep it at this level. And again, you'll see here when prices came through, They brought them back, and then we had a bit of a sell-off, and this is when the Fed said they were going to consider reducing rates, which brought the market back. But they'll do anything they can to get the markets back above these levels, and that's what we've seen recently during the month of August. However, we look here at the moment, prices are looking weak because they're making lower highs. Even though we saw some buying yesterday, the overnight market is showing some weakness, and the implied volatility is also showing some sort of correction is around the corner in this market as well, which we'll look at in just a moment. But certainly some weakness around it. If the market can't go up on a 0.25% cut last week, and the fact that they're printing 75 billion now on the overnight repo market to keep the banking system liquidity alive and well, then it doesn't bode well for the stock market. It needs some sort of shake out there to the downside again. We've got the market selling off initially. Again, you can see the 200 bar moving average, the black line there. Prices come through, and then they just test the market. And as soon as they get the market tested, they bring it back through the 200 bar moving average here, and then off we go to the upside. You can see there, just continued all the way, one-sided bet. No 76% retracement in this area here, but we don't need it when they test the market like this and bring it off the lows. It's just a matter of deciding what to do when you get the market closing above the 200 bar moving average, and then tucking in the stop losses nice and tight there. And overnight you can see prices are currently below this level and heading to the DP. They'll need to switch if prices are to move higher, otherwise we're going to see the weakness in the daily chart here continue down to the 76% retracement, and also the low of 26,711. News today. Have we got any economic news? Super Mario's out today, and Barmy Carney. We got both of them out. The former Goldman boys are going to be speaking at 2:30, 2:45. That's going to assist the markets. Certainly, Super Mario starts printing 20 billion a month to keep the European Union afloat from the 1st of November, but of course he won't be responsible for that at the time, because the convicted criminal, that is Christine Lagarde, will be taking over the helm of the money printing business in Europe. So watch that. 2:30, 2:45 could be a bit of volatility in the Dow at this time, and also the pound. And speaking of the pound, oops, get rid of that. It's a wrong thing there. And speaking of the pound, down yesterday, as they're probably all starting to think that Boris might have something up his sleeve to still leave on the 31st of October following the Supreme Court's decision. So the market was down yesterday, finding support at the 20 bar average there. And then in the 15-minute chart, you can see prices trading above the DP level, and then selling straight through to where? The 200 bar moving average, and then prices moving lower all day in the pound as well, with all winning trades there. So winning trades all the way through in the Dow and the pound yesterday as well, as the market moved lower in the pound. And also, just before we conclude, implied volatility pulling back a bit yesterday, but remaining above the 20 bar moving average. So some weakness still around in this market. And what I mean by weakness is the weakness here. The market's still holding above the 20 bar moving average, closed below this, and the implied volatility remaining above the implied remaining above the 20 bar moving average. So I was distracted by this on the left. Is likely to see the stock market move lower and implied volatility move to the upside there. And then just a clearer picture without any numbers, you can see there that we've got this weakness here. So a drop below the 20 bar moving average we see up here, you get the increased red in the implied volatility there. I need to check this actually. There's something that's happened to the color scheme in this because it's done through Excel, and if you delete some data it changes the color. That's actually incorrect there. It should be green, so I don't know what's happened there. It should turn to red when the implied volatility is above the 20 bar moving average and closing below the 20 bar moving average in the price. So I'll just get that corrected and sorted, but that's actually wrong there. It should be green. And finally, what have we got? The yield curve continues to be inverted. So again, recession down the line, and Deutsche Bank is still holding at the 200 bar moving average at the moment, traded below it, and then they brought it back yesterday, and they'll do whatever they can to keep the market above this the 640 level, which is a very important level for this market. So lots going on today. No sort of economic news except for the two bankers being dragged out at, no pun intended, at 2:30, 2:45. See what they've got to say, but they're going to say whatever they can to keep these markets afloat here. Okay, that's it. Thanks for watching. See you in the next one.